Thank you for joining us for another episode of Cryptocurrent. Just one quick reminder. Cryptocurrent is a cryptocurrency and blockchain education platform that's bridging the gap between the curious newcomers who are just discovering the space and the thought leaders who are shaping its future. All opinions expressed by Richard Carthon, the Cryptocurrent team, and their guests on this show are exclusively their own opinions. You should not treat any opinion expressed by Richard, the team, and their guests as a specific inducement to make a particular investment or to follow as financial advice. This show and any other Cryptocurrent production is exclusively for informational purposes. What's going on, everybody? For Cryptocurrent, I'm Stephen Miller, and you are watching The Aftershock, our show where we bring you the latest and greatest in the world of Web3 to keep you connected to what's going on in the world of crypto. Of course, as always, I'm joined by my co-host, Richard Carthon. Richard, how you doing today?
Hey, Steve, doing well. We're seeing a quick little rebound in the market to give the people some hopium. We got Bitcoin testing back to 22,000, Ethereum testing close to 1,500. We're back above a market cap of 1 trillion. So, in the short term, things are looking hopeful. I still think we still have some pain to go, but in the short term, makes my heart happy to see some things moving in that positive direction. But otherwise, man, how are you doing?
I have to tell you, man, I think I'm starting to see a little bit of sunshine and rays because, frankly, the Ethereum news is looking like really good in the fact that we've started to get more concrete details on ETH 2.0 merge. So that's good news. I think that's why part of the rally is happening right now. And of course, that reassures me a little bit. But I think that our listeners at home are going to be interested with the breaking news that we've got at the top of the show. So let's jump into a little breaking news. Breaking news. This just in from the SEC case versus Ripple and XRP. The judge in the case has, this is Judge Netburn, made a decision on the William Hinman testimony and the William Hinman tapes. William Hinman was the former director of corporation for SEC. And on a number of different occasions, he said a couple of things in public and in documented testimonies that he does not believe that Ripple is in fact a security. So in the decision, Judge Netburn wrote, "The hypocrisy in arguing to the court, on the one hand, that the speech is not relevant to the market's understanding of how or whether the SEC will regulate cryptocurrency, and on the other hand, that Hinman sought and obtained legal advice from the SEC counsel in drafting his speech, suggests that the SEC is adopting its litigation positions to further its desired goal and not out of a faithful allegiance to the law." That is absolutely like the biggest burn and shade that a judge can put on the SEC right now. And a lot of people are saying that this is actually going to be the nail in the coffin for the SEC in this case, because it means that all of that Hinman testimony can officially come forward as presentable evidence that XRP and Ripple Labs can use against the SEC in the determination of this case. So, Richard, what do you think about this?
You called this a while back that ultimately Ripple's probably going to come out on top and turn out okay. And they got to a point where the SEC was trying to settle with Ripple, and they're like, nope, let's see this all the way through. Man, it's going to be kind of hard to lose after this one. Like this is truly, truly, truly damning information for the SEC. Yeah.
And I hate to say it, but like it really does look like Judge Netburn is already kind of showing her hand in exactly how she feels about this case. Like she's already been saying a number of different times that the SEC is not like proving anything, and frankly, like just does not have the right to claim all the things that they're claiming about SRC as XRP being a security, especially in an overreach on the Howey test, which was directly quoted from the judge themselves. So I am over the freaking moon about this because, frankly, to see this come down in the middle of a bear market presents a better opportunity for people to be able to jump into XRP if they are not yet exposed to it. So, not financial advice. We like to give the disclaimer at the top of the show every single week. This is not financial advice, it is simply financial opinions. And I am of the opinion that XRP is definitely going to be moving mountains with this case and setting new precedents, especially as it relates to SEC and regulation. But we're not here to talk just about the breaking news in the SEC this week. We are here to talk a little bit about last week in the metaverse and the entire world of Web3 in this week's Aftershock. Let's dive in.
The Aftershock.
So this week in the Web3 lightning round, we got a couple stories that we wanted to make sure that we shared with you. And the first of which is that there is this rally going on in the overall crypto market. We mentioned at the top of the show. And it, of course, is led by Ethereum, but it also marks the crypto market overall market cap retaking the $1 trillion threshold. This is a big deal for a lot of reasons. It's a psychological barrier of resistance, and hopefully we can flip it into support. So, Richard, I know you were telling me a little bit about this at the top of the show, but I want to get your read, both short term and long term. How high do you think we fly before we go back down? Because I know you're still a little bit bearish. What is your read?
So if we keep pushing higher, I think we see a retest. If we can get Bitcoin past the 22 into the 23 threshold, we get to test back up to around 26 or 27,000 for Bitcoin, Ethereum. We can push past the 15. I think we push up to 17. But the reason why I think this is a short-term victory, and we still can see some potential pain, has everything to do with just what's happening in the equities market. It's got announced that the federal interest rates were looking to increase by as much as 100 basis points, but they came out and said that they might go as low as 75 basis points, which is still on the table. But as you keep increasing that sentiment and seeing what's happening with institutional people and what starts happening there, you could start seeing more and more people during this short reversal, if they've made some money, take that back out to hold until they can potentially find a new and better price entry, or if they're looking to find some opportunities in the equities market. So that's why I think we're still in kind of no man's land, at least for the next month or so. But I think as we get towards the end of August going into September, I think that's when we really start seeing this thing start to go in a different direction.
Look, man, I hope you're right. Honestly, I would like to see the reversal happen, but I do happen to agree with you. I think that there is going to be more bearishness before we actually see the true return to all-time highs and into a much more bullish environment. I personally think that this entire idea of what's going on in the macro is going to be the large driver going forward. You still have people in U.S. Congress that are saying that they're not saying, they're sticking to like this byline of there will be no inflation. Inflation is transitory. Inflation is good for you. Inflation only hurts the rich. Inflation is the consumer's fault. Inflation is greedy businesses' fault. Inflation is Putin's fault. Inflation is backward looking. It all is just, it's bullshit on every single level. But at the same time, like if you traditionally look back and see whichever side of the aisle you see in office and see in power, a lot of the time they're saying the opposite of what it actually is, right? So this is, I think, just another example, and I think that our inflation numbers go to show that, as well as the fact that we don't necessarily want to see job growth in this exact time. It's not a good sign in every single situation, but in this specific case, right now where we are in the current macro environment, it could be very, very damaging globally. So we'll have to see how that develops. We'll keep you posted at home, but let's go ahead and bump into our next story. So our next story, of course, has to do with Celsius, because on this show, every single week we talk about Celsius, it seems. But Celsius has officially filed for Chapter 11 bankruptcy protection. This is a very big deal, not just because, of course, Celsius is in hot water, pun intended, but we've also started to see more and more about the documentation inside of Celsius that really tells the larger story here, right? It's not just a tale of bad loans and an inability to manage your downside risk. It goes to show that there's actually a $1.3 billion hole in Celsius's balance sheet.
Yikes.
Richard, what do you think happens to $1.3 billion that just goes missing?
Oh, it got moved somewhere. Someone's got that money, and we just reported a week before this about how employee basically was whistleblowing, saying that it was a Ponzi scheme and how they were doing really attractive increased rates towards the end of this to try to lure in newer money to try to pay off older money that was trying to get out. And it's unfortunate because once you go and look at the documentation and seeing how big this money is, like, man, it's not only is it extremely unfortunate, the way that the Chapter 11 has been filed, the last people in line to have claim to the assets on deck are the people whose money's actually in it. It's all the people who in the Bitcoin, the Ethereum, the Polygon, etc., to try to get that yield. They're last in line to get that money back. And here's the really unfortunate part: they have less money than what is owed. Therefore, you're not getting that money back, which is super messed up.
Yeah, it's messed up on every single level. So my hope is that, again, everybody that is a listener to this show has been tracking the story and is well protected. But this is still a developing story, and we will keep our eye on it for you and make sure that we keep you updated week to week, just how we did during the Luna crisis, because we then talked about that week after week after week after week. But let's jump into a more interesting set of news here. And this has, of course, to do with Coinbase. So word broke the other day that the average dollar volume on Coinbase is a really big metric as it relates to the market share that Coinbase controls in the market. All right, like how much dollar volume there is on the exchange compared to other exchanges, right? Well, it turns out that Coinbase has officially tumbled out of the top 10 as it relates to average dollar volume market share. This comes shortly after big announcements from Binance that theirs is up. I believe they're trading around $11 billion in overall volume. And I think that it was that Coinbase is down around 2 billion. So it goes to show that there's been a fall from grace and that they need to get their spending under control because a lot of people are not having the same faith in Coinbase that they once had. It's an interesting story, but it's one that I think that we should just keep moving through and
Yeah,
into one that I know.
I do want to add one thing quickly on that story. So they toppled down to, I think, number 14. And something else that's interesting about this is that Coinbase took a big gamble trying to launch their NFT marketplace. And unfortunately, between market conditions, timing, and the money that they spent trying to bring in a ton of new users over to that marketplace and not getting the volume that they thought they would have grabbed from OpenSea, which even Steve and I thought, it would happen. They didn't really have that seamless integration. And when you bet big like that during a downturn, there's ramifications. And I think because of that, that's why you've seen them falling out of the top 10 down to 14. They've had to lay off a solid amount of new employees, all this stuff. So, sometimes when you're being aggressive, trying to do growth during bearish times, there's you can have a really, 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 really big drawdown because of it.
Yeah, look, I think that you're absolutely dead on with that. And we're going to talk a little bit more about Coinbase NFT in a little bit here and why that sort of narrative may be tied to what we're talking about here with Coinbase. But I want to jump ahead to this other story because I know that it's something that Richard is going to be really happy about. For those at home that are not fully aware, Richard is a big time New York Yankee fan. He's a fan of the Bronx Bombers. And it turns out that New York Yankees have officially partnered with NYDIG to allow their employees to take partial salary percentage in Bitcoin. I find this to be a really big bullish sign for the industry at large. I think that starting to see this translate into more teams across the MLB, allowing their employees and their staff and their players to take partial salaries in Bitcoin says a lot for where the world is headed. And I think that we're starting to see that wealth preservation is on the minds of everyone right now. So I find it really cool, but I want to get a real Yankees fan to commentate on it because I hate the damn Yankees.
Man, this is so cool. I mean, the concept that you can take 1%, 5%, 10%, the same way that you think about like your 401k, right? And you have like a match. So if you put up 5% of your salary towards your 401k, you'll have like an employee match where they'll do like 5% or whatever it is. So they're not necessarily matching. I'm not saying that they're matching, but just the idea you can put a portion of your money directly into Bitcoin and just have that like long-term appreciation. Especially now during these bearish times, like you have employees that legitimately that 5% could end up making them double their salary in the next 2 or 3 years just from taking a partial piece of this. So I think this is super awesome. And go Yankees. Leave it at that. What else is there to say?
I hate the damn Yankees, man. I hate the damn Yankees.
Not all of us
But
can have the greatest team on earth, but we do try. Unless you're a Arizona Diamondback fan, good luck.
it's really low, and you have to bring that into the podcast, man. I'm just saying, all right. My Serpientes, the Diamondbacks, have a lot of faith in their recent number 4 overall pick in the MLB draft that they just took yesterday, and I have hope. But this is not the podcast for that conversation, jerk. But let's jump into our next story. Right, it's Web3 time. So, Bitwise, they're a massive institutional investor that may be joining Grayscale in their lawsuit against the SEC for denying spot Bitcoin ETFs. If they do jump in on this suit and turn it into more of a class action suit against the SEC, it's going to be really funny, right? There's just going to be laughter all around the crypto world because, especially after this Ripple case, like it just goes to prove that the SEC only has its own interests in mind, because straight away, like there's no reason that they should be declining spot Bitcoin ETFs when they're already approving futures. And on top of that, they have players that are willing to back up that Bitcoin 1-to-1. So I find it interesting, but I'm curious about how you see this thing playing out, Rich, because I know the spot Bitcoin ETF discussion is really a back and forth one in the community as to whether or not we actually need it or really deserve to have them at this point. I think it's probably the better way to say it.
Yeah.
But what do you think?
So a spot Bitcoin ETF is a gateway drug to institutional money flowing into crypto. I mean, if you think about where's the first place that a lot of these institutional monies going into, they're going to Bitcoin. And the fact that you can do it in a traditional ETF where most people who are in traditional finance know what an ETF is, and they're like, oh, I can finally buy into this whole Bitcoin thing. Man, people are going to jump all over it. And to your point, there's already futures. There's already these other instruments. There's no reason. There's really no reason other than throwing some shade that the SEC is not letting this go through. So I think this is a Thanos situation where it is inevitable. It's going to happen, and we'll see.
I agree with you. I think it's only a matter of time, and we won't have to wait, for eternity to be able to actually see it happen. So this final story in the Web3 lightning round this week is one of, let's just say, contention, because I think that we've heard before that players at the FBI believe that they know who Satoshi Nakamoto is. Satoshi Nakamoto, for those that are not yet familiar, is the creator of Bitcoin. Some say it's a pseudonymous individual. Some say it is actually his name. Some say it's a group of people. And we saw at a conference this past week, some individuals from the CIA came out and said the US government knows who Satoshi Nakamoto is, and it is a group of 4 people. I think that it's really interesting that they're willing to come out and be that bullish on their assessment of it and that they know for sure who it is. But I'm curious, honestly, if like we're going to see somebody actually get outed as being Satoshi Nakamoto. I would like it to happen because I'm tired of hearing that Craig Wright is Satoshi Nakamoto. But
In the report that I was looking at, I think the FBI basically claimed that it's 4 people, and they're trying to keep those 4 people anonymous. But according to the report that I read, that they believe, or the representative who works for the government says that they believe it's 4 people.
Yeah, that part of the report is confirmed at this point. But I'm just so tired of Craig Wright taking credit, and I want there to be definitive proof that like he's not, because the dude is just he's sludge. Like he's that type of person. He's a sludge person. But my prejudices aside, Satoshi Nakamoto should remain anonymous, in my opinion. I'm kind of curious what your take is, because I think that a lot of people feel very, very polarly divided on this topic.
I think intrinsically having like a figure head to like point to doesn't intrinsically make it bad. Like Ethereum, like you have a tall held the reins for a long time, but now the community is kind of driving it forward, and it's outliving the click. But with Satoshi, keeping them side anonymous, I think is the way to go. Like I really hope they don't reveal it. I don't.
I mean, like, what if they just came out and said that Craig Wright is not Satoshi Nakamoto? Would that be good? Because like I would love that. All right,
You'd be
I'm
really
sorry.
happy.
I'm sorry. Let's move into last week in the metaverse. Fine, you got me. Okay, so this one was a really big story last week. OpenSea laying off 20% of its team. This is a really big indicator that you have a player out there that is generating billions in revenue month over month in some monthly cases, right? In bearish months, not so much, but there have been like very continuous and repeating $1 billion months of revenue over at Coinbase, right? How does a company that takes in that type of revenue not have the ability to support its staff? So they're laying off 20% of its team last week. And of course, like there's a reassuring side to the story in that their team was like very, very ahead of this and wanted to make sure that they were availing all the resources out there that they could, to make sure that each of their employees finds a landing place. Um, like there was definitely empathy in the way that it went out. It was not the case that we saw earlier in the year or late in the year last year when that head of the mortgage company was just brutal to his people and like laid off 1,600 people. It was insane if you remember it.
Yeah, that
But
was awful.
this was like the opposite end of the spectrum in terms of brutality to your staff. I know that you have some really like strong feelings about this specific story, so I would love to hand it over to you for that.
So running math, roughly OpenSea takes 3% of every single transaction that happens. And there was a time where we just kept coming out with these outrageous numbers where they just did a billion in volume, 900 million in volume, 1 point something in volume. So, let's keep it a billion, 3%. That's $30 million. So, what is their burn rate? How do you make $30 million in 1 month? And you have a staff of 90, I think it was 90 something. And
I think that number was actually wrong. I quoted that number last week to you, and I don't believe it was correct. I think that they were roughly 375.
375 employees.
Yeah.
Oh, that changes everything. Okay. Then I can follow that. It tracks a lot better. I'm going to disregard what I just said because with that many employees, then that number tracks. If it was 90, there's no way. There's something missing.
I would agree. I think that honestly, this is a company that's doing their very best to get away from the narrative of being called Broken Sea. We called them that a couple weeks ago on the show because, frankly, it is our belief that there's a lot that is left to be desired from the team at OpenSea and what they do for customer service, as well as the actual like utilities that they offer on their site. But I think that as time goes on, and we talk about a story that's coming up later in this segment, you're going to find that the pressure is on. Many other exchanges are coming for OpenSea's throat. So I'm excited to see what comes of it, and we will, of course, keep you updated. In this next story, this is the big one for me. I really love this story, and I'm going to have Richard tell you why. But Polygon has officially joined Disney's Accelerator program to develop AR, that's augmented reality, NFT, and AI experiences across the board. So, Richard, give me your perspective on this and why it's as big of a deal as it is, and then I'll try to fill in some gaps after.
So, what's really cool about this, Disney is very selective with everything in life. But the fact that they are putting this type of investment into this ecosystem to keep building out their AR, NFT, and AI experiences and figuring out the next metaverse play that they're ultimately going to be building. First of all, the Disney metaverse situation is probably going to be extremely sick. But they also want to be cost effective. There's a reason that people are really starting to stop building on top of Ethereum. It's just expensive. It's an expensive endeavor. On Polygon, it's cheap and it's fast, and you can make a lot of mistakes, and it's not going to cost you an ungodly, unforgiving amount of money. So it makes sense. And as soon as this happened, their prices started shooting up. I think they're still been holding pretty strong, but like Matic, Polygon Matic is I think a really strong ecosystem to be on the lookout for. And of course, Steve's happy because big Disney fan, and especially in Marvelverse.
I was about to say, I know plenty of people who love Marvel. I just know very few people who can go as deep as I can on some of the bullshit behind the scenes, like lore and stuff. But that's because I don't know how to sleep, and instead I just read a bunch of bullshit on Wikipedia. Anyway, that's a story for another day, and we can carry things going forward. But I think that this truly is Disney picking their blockchain of choice. That to me is what is signaling here. So if you're looking for a vote in confidence for Polygon, I think that there is not really a better one than this. So I'll be looking forward to watching this one develop, and I think it indicates that they're a great bear market buy. Not financial advice, just financial opinion. Now, here's the story that I actually was referring to twice earlier, about a marketplace that has come online that is really going to start putting pressure on OpenSea. And I never thought in a million years that I'd be saying that this is the case. Okay. But Gamestop has officially opened their NFT marketplace. They have two primary collections on there that are natively deployed, brand new collections that debuted on the GameStop platform. And in their first 48 hours, you typically hear people talk about the first 48 in a much different context. But in this one, they surpassed Coinbase's entire lifetime sales volume. And that's just insane. Because it goes to goes to show how sad Coinbase NFTs deployment really was, but it further goes to say that like you need to be taking GameStop seriously if they're going to go right for the throat with Coinbase and really show that they're worth their salt in the NFT space. Do you have anything that you'd like to add on this one? Because I think it's a little bit insane.
Yeah, I'm honestly shocked that they were able to accomplish this. Like GameStop legitimately, as a company, should have died when COVID happened, and then the Wall Street bulls just kept it alive and made it thrive. And then they're like, hey, we have all this extra money, let's go into this whole Web3 space. They do it. No one takes it seriously. I don't think they spent nearly the amount that Coinbase did, and they're already outperforming them. Like, man, it goes to show when you have the right kind of audience behind you and rally behind you, and they show up in a big way, man, that's huge.
I mean, look, it's also kind of messed up if you really think back on the stories that led up to this. I don't know if you remember this, Rich, but like I remember it very, very clearly because I thought it was one of the most messed up moves that's happened in recent memory with crypto and corporate. So I want to say this was in Q4 of last year. We saw them partner with Immutable X, and basically like a month and a half into their partnership, they had a bunch of like IMX tokens from Immutable X issued to them, and they dumped them all. Like they dumped them all on the market and just absolutely obliterated IMX's value, which is brutal of somebody that you want to call a partner. But I think on the flip side, like they wouldn't have been able to do this and come out with guns blazing the way that they did had they not just converted all that to cash. because they've been deploying all that cash to get this thing built. There's just no way. There's no other way to look at it, because there are other revenues we're not driving enough capital into the business to be able to support the development of something this robust. Am I wrong, or like, is this actually what led to this?
I think that tracks, like you were saying. They absolutely messed over Immutable X, but having that extra money to then reinvest into their product looks like it's paying off. So you mess over one to help yourself. You know, I'm not a huge proponent of that, but looks like it's working for them in this moment.
I was about to say, dude, in this moment is probably the exact words that you want to use, because I've never once seen that come back around, and karma has a way of coming back around. So I'm going to watch this one closely. I hope that they continue to contest some other exchanges. But let's move into this story from Snap. Snap, of course, is the parent of Snapchat. They're apparently exploring displaying NFTs using Snapchat's AR filters. I think that's really I really almost dropped an F-bomb there. Sorry. I think that's really, really cool. To think about yourself, playing around within Snapchat, sending just snaps to random friends of yours. Hopefully they're appropriate, and just sliding in, your Flex NFT, whether it's an Ether Rock, an Ape, what have you. I think it's a really interesting feature, especially now that we're starting to see more 3D assets out in the marketplace. Like, the idea of you playing through a snap in AR, and all of a sudden your Clone X comes up into the freaking frame. Like, that sounds like the coolest type of deployment of NFTs that I could imagine right off the cuff. But is this just fanfare, or is this BS?
I like what Snapchat is trying to accomplish. They have been leading the game in AR filters. Like the amount of data they've been able to collect, the amount of really cool things they've been able to innovate and bring to the market, I think is awesome. I just don't know that Snap is going to be the long winner. I was looking at a chart the other day of like companies and like their path to like revenues and how many like billions of dollars that they get to. And TikTok by far is the fastest runner up. Facebook's still dominating, but like they're on track to get to like Facebook type level. And I think this is cool in this moment. They have to keep doing innovative things like this, because if they don't, I really don't see Snapchat being a long-term winner.
It's really hard to view them as long-term winner, but I think that if anybody is gonna like survive in the social media space right now, you need to be innovating, and you need to be finding a way forward. And I think that of all of them, that is not like has the highest risk of not finding a way forward, it's not Snap. It may be a little blue bird, but it's not Snap. So let's just move past that one. I think it's going to be interesting to see how that develops. I hope that we get more on that soon. This is an interesting one for people who have even the faintest interest in law, because in the UK, one of the courts has officially said that you can now airdrop lawsuits as NFTs to anonymous wallets if you do not have the ability to actually contact or directly serve the owner. I never thought we'd see the day, because like this is some real Brave New World shit. But like, what do you think of this one? Because I'm not sure this would hold water in the States.
I'm not sure it would either. Ultimately, the challenge with this is what are the ramifications? I would need to go look a little bit deeper into this, but like, I imagine you have to have a very specific reason why you chose a address to drop a lawsuit. Because if that's the case, why wouldn't you just airdrop as many addresses as possible this lawsuit and just see who responds back? Like, the same way that you have all these scammers who drop these like random BSC airdrops of like a coin that's off by whatever, and if you press the malicious button, you then get your MetaMask wiped or whatever. Um, man, I just there's so much to unpack with this one that I don't see it holding up long term. Like I think that they're gonna have to get a lot more specific. I think they're gonna have to put a lot more guidelines on how this works, because this is a slippery slope. That what happens if I'm sure the same way that we're supposed to be reporting, like Coinbase or whoever your exchange is the reason that you KYC is it so that they can give your information to the government and make sure you're paying your taxes and doing whatever. So let's say that someone did that and now they've been looking for Mr. Jones and they said, oh, they're on this exchange and here's their wallet address. So now you can just go pull up on Coinbase and be like, hey, I'm looking for Mr. Jones. I need you to give me their wallet address so I can airdrop them a lawsuit. Like, again, where's the line drawn?
Yeah, I think that if there's one thing that's like almost a reassurance in this, it's simply the idea that if you look at the way the US has gone about regulating crypto and you look at the way the UK has gone about regulating crypto, the UK at the very least, even in their like system of law, has been, I would argue, almost more supportive of innovation in the crypto space than it has been inhibiting. And I don't know why that is, because the UK is a very, very, very high tax nation state, whereas in the US, we just complicate shit all the time. That's my read. I find it really fascinating that we're starting to see more nations take stances for innovation in crypto versus against, and it's going to ultimately dictate who's the real winners in the nation state world in crypto. So I'm going to watch that one pretty closely going forward, but it's interesting to say the least. Now the last one goes to serve basically an onslaught story, and when I say an onslaught story, I mean that this is a narrative that is not let up in recent weeks, and I don't see it letting up anytime soon. And that, of course, has to do with breaches and scams and security breaks and all sorts of just chaos in the world of NFTs. It's unfortunate, but it is something that I think everybody in crypto needs to be more vigilant about, and that's protecting their assets. Not your keys, not your crypto, that same sort of stuff. But make sure that you know what you're signing with your wallet. So this story in that ongoing issue is having to do with a company called Premint. Now, if you've been in the NFT space for a minute, Premint is probably something that you're very familiar with because it's how you're getting allow list spots. So by going up to Premint, you basically authorize to them and show that like what your wallet address is to try and get on the allow list. You show that you're, in a certain project's Discord server, and you show that you're following that project on Twitter. Great. That's typically what you do. And then your spot is typically raffled. So if your number gets called, you get the raffle, you are automatically on the allow list and you win. But this past weekend, Premint had a pretty significant breach where a bad actor managed to affect Premint's website and exchange a signatory prompt with MetaMask. So you go on the site and it prompts you for a set approval for all. When you sign that, it basically gives that contract owner the ability to sweep everything in your wallet out of that wallet and into theirs, which they can then liquidate. A number of individuals were affected by this, like hundreds of individuals were affected by this before the word of the scam got out. And that's really, really tragic and unfortunate, but it's a lesson that I think a lot of us have to learn at some point or another if we can't learn it just from absorbing through third parties. But in response to that, Premint has officially removed wallet connection upon login to address that breach. Now, this is a unique hack, okay? Like, it's not every day that you see a phishing wallet attempt through a site. So, like, this was a very coordinated effort, clearly very high level. There's also word out this afternoon, and I didn't want to press the breaking news button on this, but there is legitimate word out this afternoon that Yuga Labs is tracking the efforts of an organized threat group that is essentially targeting a number of different projects on social media. This means that there could be additional breaches to other social media accounts associated with NFT projects. So I would be very, very vigilant this week looking at Twitter accounts of NFT projects. If you see them announcing a mint that is out of nowhere, or you see them asking for certain information, know that they never need your seed phrase. They never need your secret recovery phrase. All of that stuff should be always kept private, and you should always look at what each individual wallet signature is that you are signing, because it is vital if you want to secure your assets and make sure that you are not ultimately scammed. Now, Rich, I think that there's a lot of things that people can do in this space to make sure that they secure their assets, but do you have a first line of defense that you'd like to recommend to our audience?
So just in this specific example, as it relates to like pre-mint and like having to do approval for a website, the safest thing you can do is creating a brand new wallet address the very first time you're going to a new thing. So if, for example, if you're doing like a free mint from ABC NFT and you're like, I don't know if they're legit, I don't know who they are, they kind of came out of nowhere, which there's a lot of big prominent NFTs that drop as free mints that are huge now, but there's also quite a few scams as well. So one of the things that you could do in this example, if you want a MetaMask, you can create a new wallet address, literally just a new wallet address, and just move just enough ETH so that you can go and approve it. So if everything's legit, goes through and works, awesome. You get the mint, you then move it to your long-term address, and you're safe. But let's say that someone comes in and you just gave them full rights to that particular wallet. There's nothing on that wallet. What do they make? So if you're trying to work with or get a free mint or something that you feel like could be suspicious, but it's like not sketching you out enough to like make you full stop, and you're still wanting to move forward, a quick way to protect yourself is to just get a brand new wallet that has basically nothing in it and move forward. And worst comes to worst, they take a little bit of ETH from you.
Yeah, I have had a lot of different conversations this past weekend after the pre-mint hack, just specifically talking about one of the falsehoods, right, behind the idea of what security really is. Because we talk about getting cold storage, getting yourself a Ledger hardware wallet, which keeps your seed phrase offline, right? It's detached, it's air gapped from your computer. You're only as secure as what you are connecting to, because you can still run off that ledger and connect to a malicious source and sign that approval, and they can still access all your wallet and wipe everything clean. But what you need to understand about that is that there is such a thing out there as like proper wallet management structure, right? You're talking about that, Rich, with the idea of like having a hot wallet and then moving from a free hot wallet, a free mint that you minted into a hot wallet, moving those assets over to a separate wallet that is not connected to other websites. That's a traditional cold wallet. That's how you should be using a hardware wallet if you're really getting down to brass tacks and best practices. But we blur these lines a little bit sometimes, and we need to always be like very, very understanding of what it is that we're doing. So if there's one big piece of advice this week, it would be to be very careful about what you're signing. Be thinking a little bit more about that this week before you sign your next transaction in MetaMask, or specifically go on to a new minting site and start like degen minting whatever free mint you have, because it always does carry risk. But that is going to wrap up this week's Aftershock. But before we go, Richard, I believe we've got some really big stuff coming up, and I'd like you to share it with our fantastic audience here.
Absolutely. So Monday we had an episode come out with Willie. He was with Fox Foundation. He actually helped set up the DAO for Shapeshift. Gives you a full breakdown of what is a DAO. Really, really cool episode. That is episode 299. So what does that mean? That on Friday we have magic number episode 300. We're really excited about it. Got some really cool info coming out on that particular episode. We actually have the team coming into Austin, where I live, to help celebrate the big announcement. Just had a press release go out, giving out all that information. And the final tease that we want to give you is we are throwing our very first event in Austin called AGME, which stands for Austin's Gonna Make It. And a play on words from WAGMI. We're all going to make it. It's various times. There's a lot of FUD out there, but there are a lot of really cool companies building some amazing projects and moving the world of Web3 forward. So we want to highlight a lot of that. While I've been here, I've been able to plug in with a lot of the local community, and I want to highlight some of that talent. We'll of course have some outside of the city talent as well, but putting on a one-day event to talk about all kinds of different talking points from the world of DeFi, what to be doing right now during this particular market, metaverse, NFTs, so much more. Steve and I are putting a lot of things together. We have a lot more information coming out real soon, so I hope y'all are excited about it. And Steve, what else do you want to tease about it?
I think the big thing that I want to tease about it is you're not going to see what's coming until you actually buy your ticket. One of the things that we're really big about here is making sure that we pack as much value into this event as we possibly can. And that means that you're going to see some of the top talent in the space. And we're going to honor a lot of the folks in the space who really deserve that stage and deserve that spotlight. So be looking forward to it. August 19th in Austin at Speakeasy downtown. It's going to be a blast. But before we go, I, of course, just want to thank everybody who has joined us for this episode. If you are not yet subscribed over on YouTube, please make sure you subscribe, like the video, leave a comment. We want to know what you think of our content here. But also, if you're listening just over on podcast platforms, we release this show as a podcast every single week to your favorite podcast directory. So make sure that you are following the show wherever you get your favorite podcasts, and then you can tune in whichever way works best for you. We just want to make sure that we're keeping you connected to the world of Web3 and the thought leaders who are shaping it. I've been Stephen Miller. You can follow me at SteveMiller_PHX. He, of course, is the one and only Richard Carthon at Richard Carthon. This has been the Aftershock. We hope that you stay cryptocurrent, and we will see you next week.